We thought you could explain Bitcoin's price change even if you didn't fully understand it. More and more I see that you pay with Bitcoin. In other words, many people say it's good for our country and helps the dollar a lot. For the first time in the years I've been studying crypto, the regulatory environment is really open to the idea of letting Bitcoin and crypto lead to new ideas. This makes me pretty optimistic about Bitcoin and crypto and the faith and the decentralization. And I was in Bitcoin at the time. I wasn't sure if I would do it again. Not only do I think Bitcoin will go up, but I also like what's going on in crypto. When I watched today's video, Tom Lee said a lot of things that really opened my eyes. I think a lot of you guys will feel the same way. The crypto space is changing very quickly, a lot faster than we thought it would in 2024 or even 2023. And the kinds of changes we're seeing this year are dreams that we can only wish had come true. That being said, it is happening right now and is likely to have a big effect on the price of XRP and many other digital assets. That's exactly why I'm making this movie today, to share this information with you. So make sure, please, hit the like button so that the whole XRP army can see this movie. Now let's begin. I believe that Bitcoin will become much more useful over the next 10 years. The value of the Bitcoin network is one reason why it has grown to 100,000. There was a time in 2017 when Bitcoin was worth less than $1,000, 0 cents. We wrote that it could reach $25,000, 0 cents by 2022. Because it has value in the network, we just said that if you model the number of wallets and the activity per wallet, which explained 90% of the move in Bitcoin from 2009 to 2017, you would get to 25,000 in 2022 and can get to 6 figures later. That's still true. Those two factors still explain about 87% of the move. There are two things that will make Bitcoin much more useful soon. One is that it's getting less regulated, right? It's really being made by the White House as a strategic backup asset, and businesses are adding it to their balance sheets because that's how people used to keep track of their store real estate. At first, that wasn't a thing, but then people learned how important it was to own land. Like, some stores are worth more because they own the building. That's what Bitcoin as a source of cash is. So banks are also very interested in Bitcoin because coins are stable, because a stable coin works better than a regular dollar. It could be the Web3 app that really changes the way banking services work. You don't need to go through a third party to send it. Yes, that's right. You can now use the safe coin market to move billions and trillions of dollars. It also works out better for banks financially. Circle. I won't say anything about its value because a net income or Tether is a better example. That's because Tether isn't based on public trust. So people like you don't really know what's going on. That's where blockchain comes in because it has been proven. You don't need to know who the other person is. The code is all you need to do. And because of this, Tether makes more money than most banks based on net income. The bank would probably make the third most money in the world, in my opinion. Which bank is better? Okay, building banking services on the blockchain is a better way to do things. Because Bitcoin holds everything together, I think steady coins are the killer app. You don't need a safe coin if you already have Bitcoin, right? There you have it. Bitcoin and building financial services on top of stable coins. Now financial services companies get it. Walmart and Amazon want a stable coin because having one can make them a lot of money. That you are using crypto to change the way money works. Bitcoin isn't at the top. Yes, so if you do this again, it will be useful since the market for safe coins is only worth $250 billion, 0 cents right now. You now know that stable coins hold the 12th most US dollars of any type of currency. One thing they like is that they own twice as much as Germany. It's safe to say that the US government wants stablecoins to become very popular. This is because stablecoins will never lose value against the dollar and US financial markets. In terms of GDP, the dollar is only 27% of the world's dollar. In regular trade on the stock market, it's 88%, 80% of the listed pair in crypto. In crypto, the dollar is more important. In the US, only 20% of steady coins are used. Just under 60% of all stablecoin trades happen in Hong Kong, China, and Japan. It's clear that this is making more people outside of the US want dollars. As a result, Bitcoin will keep going up. Yes, because Bitcoin keeps the whole record safe. As a CNBC reporter, I agree with you that sometimes you'll say something like the S&P 500 is going to go up, what, 1% or 2% tomorrow or something similar. After that, it does, how do you understand these things? A lot of it is based on facts, since we do a lot of risk analysis to try to figure out where we stand in the market. That's why a lot of the things we say are high chance things. In a way, though, that having to happen is luck, right? Because just because something has an 80% chance of happening doesn't mean that today isn't one of those 20% of days when it doesn't. Yes, because let's see if something happens 90% of the time and a million times, it doesn't happen the next 3 times, though. Like those 3 calls don't work. While Tom Lee makes a lot of important points, I believe the most important one is about stablecoin control going forward and how this helps the US dollar become more popular around the world. Since steady coins are good for the government, they have every reason to push them forward. As Tom Lee said, stablecoins are the reason why they hold more US treasuries than any other country in the world, even bigger than Germany, which has a multi-trillion-dollar economy. When you really think about it, that blows your mind. Another thing is that they are the 3rd most successful bank. In the future, every big shop like Costco, Walmart, Superstore, Amazon, and more will have their own stable coin because it will make them a lot of money to do so. As they do now with credit cards, they will all offer different things to try to get you to use their stable coin. This is going to have a huge effect on how the US economy grows in the future. XRP, Ripple, and their stablecoin RLUSD will also play a big role in this. We need to really back RLUSD so that it is used by more people around the world. This is the only way to make sure it's success. To echo what Tom Lee said, most cryptocurrency dealing in Korea and I guess even China and Japan is done through USDT trading pairs, right? In other words, all of these people are putting billions of dollars worth of demand for USDT. And this is going to be a huge deal for the US government. This is the reason they're pushing it so hard. As a result, RLUSD could be widely used and it could be used in banks and other areas. But I think everyone will try to make their own safe coin so they can get a piece of this market. Right now, USDT is the clear winner because they're years ahead of everyone else. However, many of these banks will likely decide not to use your stablecoin. We are going to make our own. We're going to tell all of these crypto companies, screw you, because now we know what the rules are and can do what we want. This might be good now. This might not be good. It's all about how we spend our money. If we don't use these banks' stablecoins and only use RLUSD, they'll have to start using RLUSD too. That's why I'm making this video today. We in the XRP army need to make sure that the future we all want is the future that comes true. When banks make stable coins, they only do it for themselves and don't share any of the benefits with us. Don't use these banks. In that case, we make our worst fear come true. But I'm going to move on and talk about what else Tom Lee has to say because it's very important. People, please pay close attention. I have another very important word for you at the end of this video. Let's get back to it, please. Based on trends over time, it's still likely to stay at 90% chance. To say that something has a 90% chance of happening is always risky, but that's why we make these calls most of the time. And very quickly, at a very high level, when you're ready to say, okay, the S&P is going to jump, that's likely to happen about 80% of the time. What signs are you taking in? As you said, you're looking at the different pieces of proof and how sensitive they are. Yes. Well, markets often make big changes when they are caught off guard. We have to, like today, because we're seeing it with Tesla. And the reason there's a surprise is that in a broad sense, there's something that says a company's value is fixed. Let's say it's earnings or something like this, S&P 500. What holds it together is the Fed's dovish language, okay? Then we worry about taxes in the economy. That's what's making the market go down. You can always look for something to counter that recession claim. And for us, it was the high yield market this year because spreads on high yields need to get to about 800. There must be an 800 basis point spread over bonds. If the term is 4%, the high yield would have to be 12% to tell you that a recession is almost certain. But the high yield spread only grew by about 150 to 200 basis points during the tariff chaos. This is only a growth scare, if that. After the April low, we stayed bullish because high yield said the chance of a recession is about 10%, but analysts said it was 60, and